QQQ versus QQQM, a comprehensive analysis. In the ever-evolving landscape of the technology sector, investors are faced with a myriad of options to gain exposure to this dynamic industry. Two popular choices that often spark debate among investors are the Invesco QQQ Trust QQQ and its counterpart, the Invesco Nasdaq 100 ETF QQQM. However, despite their shared objective of tracking the Nasdaq 100 index, QQQ and QQQM have distinct characteristics that merit closer examination. In this comparative analysis, we will delve into the features of QQQ and QQQM, exploring their investment objectives, holdings, expense ratios, and performance metrics to provide investors with valuable insights into these two popular ETFs. Join us as we unravel the differences between QQQ and QQQM to help you make informed decisions about your investment strategy in the tech sector. QQQM. 1. Initial balance, $10,000. 2. Final balance, $14,738. 3. Compound annual growth rate, CAGR, 13.40%. 6. Standard deviation, 22.19%. 7. Best year, 55.01%. 8. Worst year, 32.52%. 9. Maximum drawdown, 32.52%. 10. Sharpe Ratio, 0.45. 13. Expense Ratio, 0.15%. 14. Dividend Yield, 0.61%. 15. Notes. The initial investment of $10,000 grew to $14,738 with a CAGR of 13.40%. 15. The portfolio experienced a standard deviation of 22.19%, with the best year seeing a return of 55.01% and the worst year experiencing a drawdown of 32.52%. 15. The Sharpe Ratio and Sortino Ratio of 0.45 and 0.68, respectively, indicating relatively favorable risk-adjusted returns. Invesco QQQ Trust QQQ. 1. Initial balance, $10,000. 2. Final balance, $14,708. 3. Compound annual growth rate, CAGR, 13.33%. 6. Standard deviation, 22.19%. 7. Best year, 54.85%. 8. Worst year, 32.58%. 9. Maximum drawdown, 32.58%. 10. Sharpe Ratio, 0.45. 13. Expense Ratio, 0.2%. 14. Dividend Ratio, 0.2%. 15. Notes. The Invesco QQQ Trust started with the same initial investment of $10,000 and achieved a final balance of $14,708, resulting in a CAGR of 13.33%. 15. The fund exhibited a standard deviation of 22.19%, with the best year recording a return of 54.85% and the worst year experiencing a drawdown of 32.58%. 15. The Sharpe Ratio and Sortino Ratio of 0.45 and 0.67, respectively, indicating comparable risk-adjusted returns to QQQM. Other key metrics. 1. Arithmetic mean, monthly, annualized. Portfolio 1 slightly outperforms Invesco QQQ Trust in terms of monthly and annualized arithmetic mean returns. 2. Geometric mean, monthly, annualized. Similar to arithmetic mean, Portfolio 1 exhibits slightly higher monthly and annualized geometric mean returns compared to Invesco QQQ Trust. 3. Standard deviation, monthly, annualized. Both portfolios have identical monthly and annualized standard deviations, indicating similar levels of volatility. 5. Maximum drawdown. Both portfolios experienced similar maximum drawdowns of around 32.5%. 6. Stock market correlation. beta, R2. Both portfolios have identical values for these metrics, indicating a strong correlation with the stock market and similar market sensitivities. 7. Sharpe Ratio. The Sharpe Ratio is the same for both portfolios, implying similar risk-adjusted returns. 8. Sortino Ratio. Portfolio 1 has a slightly higher Sortino ratio compared to Invesco QQQ Trust, indicating better risk-adjusted returns with respect to downside volatility. Contrast. 1. Alpha, annualized. Portfolio 1 has a positive alpha of 0.07%, while Invesco QQQ Trust shows a slightly negative alpha, 0.00%, suggesting that portfolio the 1st of May have generated slightly higher returns than expected given its level of risk. 2. Trainer Ratio. Portfolio 1 has a slightly higher trainer ratio compared to Invesco QQQ Trust, indicating better risk-adjusted returns relative to systematic risk. 3. CAGR Ratio. Both portfolios have similar CAGR ratios, indicating comparable risk-adjusted returns relative to maximum drawdown. 4. Active Return, Tracking Error, Information Ratio. These metrics are only applicable to actively managed portfolios, so Portfolio 1 exhibits active return, tracking error, and information ratio, while Invesco QQQ Trust does not. 5. Skewness, excess ketosis. Both portfolios have similar skewness and excess ketosis, indicating similar distributional characteristics. 6. Historical and analytical value at risk, 5%. Both portfolios have similar values for historical and analytical value at risk at the 5% confidence level, suggesting comparable downside risk at this confidence level. Overall, while Portfolio 1 and Invesco QQQ Trust share many similarities in terms of performance metrics, Portfolio 1 appears to have slightly better risk-adjusted returns and may have exhibited some level of outperformance relative to its risk profile. Expense. 1. Expense Ratio. QQQM has a lower expense ratio of 0.15% compared to QQQ's expense ratio of 0.20%. 1. This means that investors in QQQM will pay less in fees for the management of the fund. 2. Dividend Yield. QQQM has a higher dividend yield of 0.61% compared to QQQ's dividend yield of 0.20%. 2. This means that investors in QQQM can expect to receive a higher percentage of dividends relative to their investment. With an expense ratio 25% lower than that of QQQ and an increased dividend yield, QQQM presents a compelling proposition for investors seeking cost-effective exposure to the market. This combination of lower fees and higher dividend yield can potentially enhance long-term returns and income generation. Running a Monte Carlo simulation at the 75th percentile, investors could potentially see their portfolio grow to an impressive $582,445, while the 90th percentile projects an even more substantial value of $1,246,297. In conclusion, the comparison between QQQ versus QQQM reveals compelling insights for investors. While both funds track the Nasdaq 100 index, QQQM stands out as a more cost-effective option with a lower expense ratio and a slightly higher dividend yield. Additionally, our Monte Carlo simulation underscores the potential of QQQM to deliver impressive returns with manageable risk, making it an appealing choice for investors seeking long-term growth. Ultimately, the decision between QQQ versus QQQM may come down to individual preferences, investment goals, and risk tolerance. However, for those looking to maximize their returns while minimizing costs, QQQM emerges as a promising investment opportunity in today's market landscape. Do you want to learn how to backtest different funds and compare them? Click this link.